Alright, so transaction number one, and this is how they'll typically have them listed. So it'll say April and then the 1, 2, 5, 6, 9. That's like April 1st, April 6th, April 2nd, whatever it might be. So the first transaction said we received cash from an owner as an investment. So the first thing that I'm going to do is I'm going to try and determine which two accounts that we're actually going to be dealing with. So from that transaction, what do you guys think it's going to be? Cash. So I'll write cash in. And then what's the other account? Capital. And Capital has an owner's name, so it says Kathy Burgum. So we are. So, cash. Are we getting cash or losing cash? We are getting cash. So cash is going up. Does cash go up on the debit or credit side? Agreement? Alright. So we're going to put $5,000 on the debit side of cash. Capital, we're also gaining capital. Capital goes up on the opposite side. So if we're positive about a debit on one side, we know the other side has to be a credit. So now I'm going to come down to the next set of T accounts. Here we've got April 2nd. It says we paid cash for supplies. So what are my two accounts? Cash and supplies. All right. Are we getting cash or are we losing cash? Losing. So we lose cash on the debit or credit side?
Credit.
Agreement? Okay. So we're $50 cash on the credit side, which means we're getting supplies. Supplies is an asset. Assets go up on the debit side. So we're evened out. On the 5th, it says we paid cash for insurance. So what's my two accounts I'm dealing with? Cash and PPI. PPI, it means what? Prepaid insurance. All right. Are we getting cash, losing cash? Losing. We lose cash on which side, debit or credit? Credit. Oh, that's not 50 though, it's 75, sorry. And then we're getting insurance, which is an asset, so that's going up. 75 on the debit. Okay, two more. On the last one, it says, on the 6th, it says we bought supplies on account from Bales Supplies for $100. So what's my two accounts? From the list they give you up top, what are my two accounts you think I'm dealing with?
I have a question first.
Sure.
Why under April 5th, there's two extra things?
I think it's just in case you mess up.
Oh, okay.
Because otherwise they'd only fill half a page.
Yeah.
So on April 6th, bought supplies on account from Bales Supplies. What's my two accounts?
Supplies and account payable.
Okay. Supplies and accounts payable.
Bales supplies.
Bales Supplies. So supplies, are we getting or losing? Getting. Supplies is an asset, so how do we record a gain?
On the debit side.
On the debit side in the amount of $100. Perfect. Accounts payable, that's a liability, right? So are we increasing or decreasing accounts payable?
Increasing.
Increasing. Okay, so when we increase a liability, are we going debit side or credit side? Credit, $100. And then the last one, 9, we paid cash on account to bales, supplies, $50. So what are my two accounts? Cash and what? Accounts payable. Getting cash or losing cash? Losing. Where do we decrease cash?
Credit.
Credit. Accounts payable is a liability. Is our liability going up or down?
Down.
Down. So liabilities decrease on
Debit.
debit side. Everyone, just a quick check back. Debit, credit, debit, credit, credit, debit, debit, credit, credit, debit. So we should equal out.